After 5 years, I finally solved trading and I condensed it down into a simple 3-step formula that anyone can use. So in this video, I'll show you how you can use that formula to become a profitable trader today. Okay, so the first step and most important step in the formula is bias, right? Now, if you don't have a bias, you're trading blind, and the only way to determine bias is to look for liquidity, right? Which is simply stop loss orders or money, right? Liquidity will tell you everything. It's the only concept you need in trading, and after 5 years, it's the only concept I still use. Liquidity will tell you literally everything, right? And it will tell you the bias. So to determine the bias, all you need to do is get onto the 4-hour chart, and you've got to ask yourself which major high or low is price most likely to go for at the point that you are on the charts, right? So at this point right here, what high or low is price most likely to go for? Right, just have a few seconds to think. Right, hopefully it's pretty obvious. We're going to go for this high here, right? Price is right next to it. Let's mark this out. Price is right next to this high, no respect of any order block, and it's literally just begging to take out this high or at least go towards it. Now, you might be wondering, okay, why is liquidity so important? Liquidity is simply stop loss orders or money, right? Key thing being money, right? Everyone loves money. And smart money, big banks, they love money. And the only way they can get into and out of their positions is where there's lots of money. And they're only going to find that at major highs and major lows on the higher time frames, where there's going to be lots of stop loss orders. Because at major highs here, there's going to be stop loss orders from traders who think support and resistance, price is going to bounce off. And similarly for the low, right? But all we need to know for this formula to become profitable is just to target highs and lows on the 4-hour chart. I cannot stress that enough, right? So at this point right here, we know that price is most likely to at least come towards this high right here, right? So what we've essentially done right there is we have our bias. We have our direction. We know what price is most likely to do next. It's likely to come towards this high. Now, what price does afterwards, whether it smashes right through this high and continues up on gold, and we look for, the next logical high, who knows? Price could also reverse afterwards. We don't care. All we know is that price is going to come towards this high right here, right? This high is essentially a magnet for price, pulling it towards it because there's lots of money there. So that right there is our bias. Let's just remove this more. Don't even know how we can remove that. There we go. That right there is our bias. We know that we're bullish. We have our direction. All we're going to do now when we get onto lower time frames is look for our sweep and look for entries, only bullish entries, right? Really important. We have our bias. We're only going to look for trades in that direction. That is the highest probability setups you can get in trading, right? So let's go into lower time frames and look for our sweep. Okay, so for the second step, now that we have our bias, is we need to wait for a sweep, right? Now, waiting for a sweep is going to give you the highest probability setups, because how many times has this happened, right? Let's zoom out. This right here is that 4-hour liquidity pool that we were talking about. This is where the market is going to go towards. But if you've been trading for any length of time, you know the markets do not move in straight lines, right? We can't just buy price and hope that it goes up in a straight line. It moves in, I guess you would say, jagged patterns. And in fact, the old, what would you call it? The old saying of buy low, sell high, right? Buy low on some sort of retracement, fair value gap, order block, and ride price up. In fact, that does not work, right? That will not make you money. You can try it. I tried it for 4 years, about 3 years, and could not make any money with it whatsoever, right? Because how these markets actually move is something like this. So let's imagine you're bullish, right? Price will come down. It will take out some old low when you're bullish. It will take out some stop loss orders. Then it will shoot off in the opposite direction. And then and only then will it give you a retracement. It will give smart money traders, those in the know who know how price actually moves, all their retracements on fair value gaps, order blocks, whatever they like. And then it will go straight off. And after every single liquidity sweep or stop run, there will be a massive move in price action, right? Now, can you see this framework anywhere in price action? I mean, it's a bit more clearer, right? Can you see this framework anywhere in price action? Can you see some low, some old low taken, price shoots off and gives you a retracement? Can you see that anywhere in price action? Should be able to see it, right? Because I'm marking it out for you. So can you see this low right here? That there's going to be some stop loss orders here. No one knows how much, even with depth of market and all that stuff, you still can't see because, orders can get spoofed and stuff. All that we know is that, just think, right, this is gold, a major financial market, one of the biggest markets in the world. There are trillions of dollars moving through this market daily. There's going to be good money at this low, right? Not as much as there will be on, the 4-hour chart, but there will be enough liquidity, enough stop loss orders for smart money to at least target, right? So can you see we have this low? Can you see how price comes just below this low, just enough to take out these stop loss orders, and then quickly shoots off in the opposite direction, and then gives all of smart money traders the high probability retracement, nice deep retracement, and then shoots right off, right? That framework right there, you will see in every single market on any time frame. This is the exact same setup I use on the 1-minute chart all the way up to the 4-hour chart on every single time frame in between, right? And you can go look in the comments as well if you don't believe me. This setup it's insane, right? It's the only thing you need in trading. Bias, sweep, entries, right? So we've got our sweep, and for those, those who are going to ask, oh, Atif, there's no market structure shift. You do not need market structure, right? I don't know how many times I've got to say this. So many traders get the liquidity right, they get the sweep right, and instead of waiting for their entry, which they should be doing, they're like, oh, I'm waiting for, the bodies to close above this high, and then I'm going to enter on a retracement. Listen, market structure is not how these markets move. Goldman Sachs is not buying price because, some candlestick closed above an old high. They're only buying based on liquidity, where they can get into and out of their positions for their clients. It's the only reason these markets move. No one knows their real intention. All we know is that if they're going to get into and out of their positions, they're going to have to target major highs and major lows on the higher time frame, which is this blue line here, right? The 4-hour high. So price is going to move towards this high, right? Hope you understand that. So we've got our bias, which is this high here. And let me just mark this out, right? This is the 4-hour high that we talked about right in the beginning. Now, the reason this is important is because it has stop loss orders or liquidity. These are all the exact same term, right? So it's not the terminology that makes you profitable, right? It's the actual logic. So stop loss orders, what is it? Let's just say liquidity, can't even spell, or money, right? Because the reality is, the only thing that matters is there's lots of money at this high, right? That allows big banks, smart money to get into and out of their positions. The only reason these markets move. I hope you understand that. There's a lot of misinformation on this industry. But here we go. We have our bias, which we just talked about. We have our sweep now. Now, for the third part, is our entry. Now and only now do we look for our entry. And this is where you probably hear like ICT and other traders saying, the entry patterns are least important. It doesn't matter. And you're thinking, what the hell? Like, surely the entry pattern is important. Only now is the entry pattern the least important. Now that we have our direction, our bias, and we have our sweep, only now is the entry pattern irrelevant. Any entry after the sweep, after we have our bias, will do, right? Any entry. So usually I like to say, wait for a fair value gap to form. You can enter on this fair value gap. Your stop's going to be quite big because this is the only caveat to the entry. Your stop must be fixed at this low here because this is the low that caused the liquidity sweep. Your stop will always be, so let's just imagine you enter here at any random position, stop always fixed at this low. So if you want a deeper retracement for a higher risk reward, by all means do that, but you do not move your stop loss for a tighter entry. There is no point waiting for a sweep, and this model will not work. You will get stopped out only to see price go straight to take profit, right? You always have your stop fixed at this low. Now, in terms of entries, any entry that you like will do as long as you've got the bias and the sweep. And usually I say fair value gaps. If you go onto the 1-minute chart, because right now we're on the 5-minute chart, there will probably be a fair value gap somewhere here, right? You can imagine a 1-minute fair value gap that you can enter on, right? But, any entry will do. You can enter on this order block like this. This order block here, last down close candle for the up move. And like I said, stop always fixed at the low here, and then target whatever you want, the old highs here. And again, another reason why I don't like market structure is this is actually double highs, right? Double highs right here. So this is massive liquidity. This is what it really is. It's getting traders to short this, thinking that this is support, what do you call it? Resistance, right? And then put their stop loss orders here. So this is just creating even more liquidity for smart money, right? This is stop loss orders. I'm even more confident now that we've got double highs, that price is going to go straight through and smash right through this. Right, so instead of waiting for a market structure shift, oh, I'm not going to enter because of it, I'm happy, right? I'm very happy. I'm like, hey, look, equal highs here, 4-hour high all the way up here. Like, I'm happy. I want to enter the trade. So you can enter on the order block, but for me, the only thing I still use after years of trading is obviously the bias and the sweep. But for my entry, I use a simple Fibonacci optimal trade entry, whatever you want to call it, like this, and I enter on the 0.705 level. This level does not matter. I think when I was learning from ICT, this is what he used. I've copied it after years of trading. It's the only thing I've used. I haven't changed it because I don't know. I just kept it the same. These numbers do not make you money. The only thing you really need for Fibonacci is 0, 1. 0.5 is very important. It's not for entry, but it helps you to determine premium and discount, which I won't talk about in this video. And this is my entry, 0.705. Feel free to backtest this level or use whatever you're comfortable with. Does not matter. Like I said, entry pattern, least important thing once you have the bias and the sweep. So what I do and what you can do with Fibonacci, enter on your position, right? 0.705. Stop always fixed at the low, and then you target a simple 3 to 1. Right, easy bread and butter setup is what I do every single time without hesitation. I've done this on the 1 minute chart, on futures, forex, gold, crude oil, silver, copper, like all these weird assets. I've done it on every single market you can think of, crypto, every time frame, all the way from the 1 minute up to the 4 hour chart. This works, right? Now, you might be wondering, oh, Atif, we have liquidity here. Should I be targeting? Should I do this for my take profit? No, not if you're a day trader or a scalper, because you want to be done in the day, right? This is why smart money, those who actually control the market, generated stop loss orders here as an easy target to get out of that position. And then you can see price chops for a bit, and then it goes off. Right now, if you want to be a swing trader and you want to hold, all the way up here, by all means, go and do that. But most of you are scalpers and day traders, right? Get your 3 to 1, get your money, and move on from these markets, because these markets are nasty and they can reverse very quickly, right? Last thing you want is for price to almost hit your take profit and then go and stop you out, right? So if you get money, be grateful. And if you want to learn more about trading, go check out this full 2 hour trading course on screen now.